We're moving right along onto step 4 of the loan process. Now this step I could talk about probably for hours and you'll probably still have questions. This is called credit. So first and foremost, I just want to explain to you, a lot of people tell me, hey, my credit is 700. And then when I pull their credit, maybe it's 720 or maybe it's the opposite, maybe it's 640. A lot of people are concerned about this because they think that mortgage inquiry dropped their score. That's not the case. So with credit, everyone realizes that there's 3 major credit bureaus: TransUnion, Experian, and Equifax. What a lot of people don't realize about credit is that there's actually 8 or more different versions of each of those credit bureaus. So when we pull our version, it's the actual mortgage version. When you go to apply for a credit card or like a Macy's account, those are actually retail versions. If you go and apply for an auto loan, that's actually an auto version. There's background versions. There's monitoring versions, which are the versions that you see on any of the Credit Karma, freecreditreport.com, any of your credit card apps, your banking apps. Those are the different FICOs that you actually have access to. So when our score differs very much from yours, don't be concerned. It's just that we're looking at the mortgage rating credit score. So we're going to go into different things that impact your credit. So first of all, one of the biggest impacts on credit is late payments. So let's make sure if you've had any lates in the last 12 months that you just continue to make those payments on time. Because if you do have one, it does definitely pull you back and it's harder to recover from. So make sure you continuously make those payments on time, especially after we've gone through the pre-approval process. Another thing that can really hinder you after we've pre-approved you, let's say that you had a collection that's just been kind of hanging around. It hasn't hit your credit, but you received a letter in the mail and they said you have 30 days to respond to this letter or we're going to report to the bureaus. I want you to make sure you pay attention to those letters because that can definitely hurt your approval. If you don't make that payment, all of a sudden you could get that collection on your credit report that can pop up later throughout the process. For us as lenders, it's really important that we look at all of your payment history, everything that's reported as monthly payments. Student loans are one of the things that people have a lot of questions on because a lot of you, especially right now, are still in that forbearance period, whether it's an in-school forbearance, whether it was a COVID forbearance, whether it was an income-derived repayment plan at $0. If you are in a forbearance, we do still have to use a monthly payment. If you are in an income-derived repayment plan at 0, then in a lot of circumstances, we can use that $0 monthly payment. So just keep in mind that student loans can definitely impact your qualification, and we will look at all of that for you. If you have charge-offs on your credit report, we are not required to count a monthly payment for you. So those charge-offs are actually something that we ignore as lenders. However, for you, those charge-offs can come to you in different manners. So those are kind of just like collections when you receive those letters in the mail. Make sure if you've had a charged off account and they send you something in the mail that you pay attention to that right away, because sometimes those charged off accounts can turn into actual judgments. They can actually take you to court. So just make sure you're watching out for all of that, because your credit and what we've pre-approved you on in step 1 of the loan process can change dramatically if any of these credit items change from the time you are pre-approved to the time you get into escrow. So let's make sure that we pay extra love and attention to our credit. One more thing that makes us just a little bit different when it comes to your credit is that we do analyze your credit with a simulator, and we will look over your credit. If there is any room for potential improvement, we will tell you exactly what to do. Sometimes people make the mistake of paying off items on their credit report because they think it's going to benefit them, when in actuality it could hurt you. So make sure you're listening to the guidance that we provide and not just going and paying off old things. Make sure that we're preparing you and that we're working together on that.